Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, even though the market seems like it's running fast, we're falling further and further behind. We're going to talk about what that means. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Okay, Bob. So we have this illusion oasis, if you will, of the stock market, near all-time highs here. But really, it's a mirage, isn't it?
Yeah. So, we talked yesterday about the new narrative is called the no landing narrative. And what the picture they're trying to paint is that growth is going to accelerate, earnings per share are going to accelerate, and that's good for the stock market. But we actually have data. We're going to show you the data that they're talking about here. We're going to show you there's data that shows, though, at some point there's a tipping point with inflation ahead of growth, that you get a situation where even though they're pumping more money into the system, it actually destroys margins. But we'll get to that in a second. The first one I want to show you here is this is how well Ben Bernanke, they're all together.
Jerome
Powell is doing his job, or the Biden administration in controlling inflation. This is the consensus forecast for inflation on a go-forward basis. It's going the wrong way, Philip. Second one here is they're saying because we have inflation, companies are raising prices faster than their costs, so they're looking for an expectation for earnings per share to accelerate. But here's the next one that's the craziest one. This is growth. Okay, growth is falling behind inflation. We talked about this before. You have a growth rate of, of consensus was at 2.4%. You have consensus CPI at 3.1%. Now, the growth rate is optimistic, and the CPI report is optimistic. So we're probably net effect. Your standard of living is falling in aggregate, but it's lumpy. It depends on what sector you're in, and where you live is how much it's affecting you. And so we're actually falling behind. And when this matters, Phil, it matters where, and I'll bring it back to my old corporate days when we get in these, our big staff meetings, and we're talking about the street is expecting us to do X amount in revenue and X amount in profit, and then the CEO turns around to you and says, well, just raise prices. You think these guys have got, MBAs from Wharton and Harvard would understand the sensitivity of price to sales. And you get to a point now where we have people that literally can't absorb any more credit, either willingly or unwillingly, and their job losses are coming. We're going to talk about that tomorrow. Job losses are accelerating in many parts of the country, scarily, by the way. And you have a situation where revenues fall. So it doesn't matter how great your margins are. If I sell 10 units at 10% margin, right, and then I turn around and I want a 20% margin but only sell 3, well, I'm making less cash flow. And that's what eventually happens. You can show these earnings per share. These are what I call sugar highs, where they're just squeezing labor out. There's really only one dial to press, right, Phil? Either you got a product that's knocking its socks off and you have what's called operational leverage, or you go ahead and you just whack out a bunch of people or rip off a bunch of rent, and then you get short-term one-time gains in earnings per share. And I think we're in that phase now where we're doing the last of the employment layoffs. And remember, last time I checked, I'm not sure about this, Phil, maybe is that unemployed people don't spend money. I'm pretty sure about that.
Yeah.
And so what we're doing here is, and the people are getting unemployed are people who make the most money in aggregate.
No.
Because that, you can't move the needle laying off a bunch of minimum wage people, but you can sure move the needle by laying off a bunch of middle managers.
Mm-hmm.
And these people are then just screwed.
Mm-hmm.
And they're not spending money, not taking trips, they're not doing things. The kids aren't going anywhere, they're not going to camp. and they're going from eating beef to eating chicken, or Chef Boyardee, depending on what genre you're in. And so I want to throw that at you. This is what people don't get. They make it sound like everything's so great. Hey, the economy is growing 2.4%, but your cost of living is growing in excess of that. So how are you going to win?
You're not. I can't really add much more to that. I think you've covered it well. But this EPS going, these estimates, stair stepping up into 2024 and 2025. First of all, trying to forecast 2025 right now is ludicrous. But this is going to be the catalyst for why this market has one final push. And I'm of the mind now where I think you could almost see, I think you can see a poke above 6,000 on the S&P 500. That's still quite a bit higher than where we are currently. And I also think Bitcoin, we were talking about 105, maybe 115. That could, Bitcoin is really good at going farther than most think, both ways, up and down. So I've also crunched some numbers where it's plausible to see Bitcoin maybe even get up as high as 160. Now, if that happens, everyone in the world will be trading stocks, will be trading crypto, and everyone will be in a euphoric state. And the last thing that they're going to want to hear about is, the market's topping out and we're going into a big, long recession. But I think that's really how it's going to play out. So you have the catalyst here for the EPS. And then what we're going to end up seeing happen is they're going to revise the numbers down huge after the fact on unemployment, on claims, GDP. They're going to have these big downward revisions, and that's how they're going to get you. Now, the market will have already topped when that happens because Wall Street knows those numbers are coming. Someone always knows. So I want you guys to expect that to play out that way. So it's not a surprise to you when it does happen. And then you're crying about how, not that you guys would cry, but a lot of people would be complaining about, oh, it's rigged because they revised the numbers down. That's why the market's, down, and, they knew. Well, I'm telling you guys now, that's probably how it's going to play out. So be prepared.
Yeah, and it's really where are you going to be, right? So I think I'm sticking to my thesis is commodities where the money is. The tech already had its big run, and I know today you also pointed out in the room that natural gas hit its 3.5-year low.
Yep.
That thing is probably a black swan move away from a 20 or 30% move higher.
Yep.
Problem is you just don't know. I don't know why these producers are selling forward so much. I think because oil production is still pretty high. But at some point, natural gas will bounce because it'll just shut wells off. And we just had a great trade today in rum. Truth Social went live, Phil, and we're merged, whatever that event was, and it popped 40%. Most missed that gap up unless you were already in it. But we went ahead and did a sympathy trade with rum. Guys made between 7 and 15% today, one day move. Ahead of earnings, I hopped off because I don't like the whole things in earnings. But that silly season's coming too. There'll probably be a lot of volatility there. And if we truly believe that the market's going to make this run, between now and either May 15th or August 15th, I think, when I expect the crack up, you can still short volatility yet. I mean, if you want to day trade volatility, throw it on a 15-minute. You could probably take 2 or 3 day trades a day. So there's ways to make money in the market. We're talking macro here. I'm extremely worried, in terms of when this thing falls, we have so many instances where you have 9 months up, 3 weeks down, and you lost 80% of the move.
Yep.
That's how fast it happens. And most people don't get out alive because they expect us to buy the dip for the next move higher.
Right.
There's also a head and shoulder pattern, I think, forming on NVIDIA too to keep an eye on. So there's a lot of things to watch for. It's going to be really interesting. At this point, man, Phil, I'm taking it 2 or 3 days at a time. I'm way too nervous. I'm really heavy in energy. It's still playing out for us. I still believe with you that once Bitcoin climbs over that 73,000, I think the Bitcoin miners are going to rip again.
Yep.
They're still consolidating. They're trying to understand what life looks like after the halving, and they're going to probably have their one last hurrah on that. Maybe we talk about what Bitcoin does after halving. Maybe we talk about that tomorrow or Thursday, Phil.
Yep.
So, just keep an eye on everything. Gold and silver miners look good. It'd be really interesting to see with the bridge collapse in Baltimore, how that affects some of the transport stocks. I don't know. It's kind of a mishmash right now. The Dow Jones transport was shut down for a while today, where people having a hard time trading it. So there's a lot of worry there. That's not a quick fix. This is what I was talking about, Phil, when we talk about these black swan events.
Right.
Well, I don't even call them black swan, just events that they can't fix by papering it over a narrative.
Right.
That bridge is down for years.
Oh, it's a massive failure. I mean, that's a high traffic bridge, and all that port is stuck now. Like all the ships are stuck in port. I mean, how long is that going to be? That is not a mess you can clean up in a couple days.
No, and you can't take the 95 through the tunnel because there's hazardous waste and there's other limitations on weight. That means everybody and their brother with a truck has to go around that belt. I do not want to live in Baltimore or Washington for the next 2 to 3 years.
Yeah.
I mean, you're talking massive gridlock, in terms of being able to move goods and services. They're going to get their own inflation rate, Phil, too, because you can imagine the cost increases just getting supplies in. It's kind of like it'd be COVID all over again.
Yep, and that's why we said, the Fed's in a tight spot because you can't afford any kind of thing like that to happen. Now, this might be just a regional thing, but even if it is a regional thing, that is a huge impact on that area and on shipping and trucking. So I think the transports is definitely the DJ transports is definitely gonna feel a dent on that one.
Yeah, and look, we better hope this was an accident and we don't get a follow through because our infrastructure is pretty vulnerable to some really interesting events. So I don't even want to talk about how easily LA could get shut down.
Yep.
But with that, let's talk tomorrow, Phil. I think there's some trades to be made. You're right, we're in the blow off phase. I have to wave the white flag. Good thing I was only shorting Nvidia, so that's the only thing I really, and Kathy Woods, and other than that, I'm long, so I'm absorbing it pretty well. With that, guys, check out our service, tradelikeagenius.com. Like today, we've made people more money than they probably spent on the service for a year just on one trade. You can do it too. Have a good one. See you later.
Trade Genius.